Welcome, dear traders. You are watching a recap of the Asian session. As a rule, Australian and New Zealand stocks climb amid optimism on Wall Street. However, the opposite happened today. Equities in Australia retreated from their 9-month highs. In New Zealand, stock indexes made an attempt to approach 10-month highs to close the week on a positive note. Japanese shares also showed moderate growth. Let's discuss what factors impacted Asian trading. The main driver that sparked bullish sentiment in stock markets was the Fed's rate decision on Wednesday. However, investors cheered up not because of the size of the rate hike or Jerome Powell's comments. They felt euphoria as their predictions came true. Now they are able to build their strategies not on hopes but on solid facts. They even ignored Powell's warnings that the interest rate would remain high for a long time. Speculators prefer to see the future in brighter colors than Fed policymakers. Therefore, investors are confident that global inflation is gradually easing and the Fed will be able to carry out a soft landing. In other words, the Fed could get inflation back to the target level and avoid a deep recession. The central bank will make rate decisions based on incoming macro stats, namely the labor market and the wage growth data. Many components of the consumer price index have already been revised. It indicates a slowdown in inflation, so only the tight labor market prevents the Fed from easing monetary policy. Taking it into account, one would hardly be surprised by a rise in the greenback yesterday. After the release of the US jobless claims report, the unemployment rate has been declining for the fourth week in a row, and this indicator is usually released before the monthly NonFarm Payrolls. The ADP report for January is on tap today. Market participants are sure to analyze it carefully, especially average hourly earnings. The US dollar is likely to extend its rally, which began on Thursday, consolidating in the range of 101.70 and 102.00. Its rise could last at least until the publication of NonFarm Payrolls. Its movements were also influenced by the rate decisions of the ECB and the Bank of England. Both regulators raised rates by 50 basis points. While the rhetoric of the Bank of England officials was dovish, the ECB remained extremely hawkish. The ECB began to hike rates aggressively relatively not long ago. It appears it will end the tightening cycle later than other central banks. The euro is losing momentum versus the US dollar due to soaring inflation. Investors are getting rid of the euro and the pound sterling. It's bullish for the US currency. Therefore, it entered the upward channel again yesterday and it rose to 101.90 in the Asian session. The movements of the dollar-yen pair were affected by the Bank of Japan statements. Although those price changes were rather modest compared to other currencies, the yen was able to reach the intraday low of 128.5. It was trading at 128.60 in the morning. As investors expect the Fed to cut interest rates in the second half of this year, US government bond yields slipped lower. The yield gap between Japanese and the US government bonds is narrowing. It may reinforce the bearish trend in the pair. In the Asian session, the yen managed to withstand the pressure of the US dollar. It was moving in the price channel of 128.50 and 128.80. Meanwhile, in his speech today, Haruhiko Kuroda stressed the importance of maintaining an ultra-loose monetary policy to support the economy and prompt companies to raise wages. Given that his term ends on April 8, traders are musing about the possible candidates for this post. For example, now the majority is betting on the appointment of former Bank of Japan Deputy Governor Hiroshi Nakasa, and he now holds a post in the Asia-Pacific Economic Cooperation Advisory Council. The Aussie failed to retain its upward movement in the Asian session. It tumbled to 0.7046, although it regained some of its losses and China's services sector revived. The Aussie was unable to climb. The US dollar was fairly stronger. Besides, another negative factor is the fall in commodity prices. On the top of that, inflation in the country keeps rising without showing any signs of a decline. So the Aussie slid down due to the likelihood of a recession in the economy. The AUD USD pair entered the downward channel of a 0.7045 and 0.7085. The New Zealand dollar also failed to climb despite positive news from China. While New Zealand stocks are approaching annual highs, the Kiwi is losing steam. On a Friday morning, the NZD USD pair edged lower to 0.6463. Inflation in the country has perked. In the fourth quarter, the reading turned out to be lower than predicted. The Reserve Bank of New Zealand is now expected to become less hawkish after its sharp 75 basis point rate hike in November. It may also limit the upward potential of the Kiwi. In the Asian session, it was trading in the range of 0.6456 and 0.5483. One can find an excellent entry point even despite sharp price swings. To do so, it's necessary to keep abreast of fresh market news. Subscribe to our channel and stay up to date with the latest market developments, and leave your comments down below. See you soon.